Alright, apes and apettes, welcome back to the channel. We have a lot to talk about here in this video, including the artificial shorting that is happening with AMC. But most importantly, I do want to highlight this fact that I have been preaching about religiously here on this channel, which is AMC is sitting close to its fundamental valuation. So even though you might see red days on AMC, you're no longer seeing 10% down red days. So I think right now we're really at that pivotal moment where we're at our fundamental valuation, if not under our fundamental valuation. And I think there's not that many sellers left in the stock that actually hold the stock, including apes, retail, institutional, not including short sellers. So that's something we're going to talk about here in this video, and I think you guys will find a lot of value out of it. We're going to go over why the markets are so choppy today, going up and down, but really not doing anything at all. This is killing a lot of premiums, and you guys should be very careful. We do have big catalysts that are coming up later this week. The holy grail of catalysts is on Thursday, so we are going to go over that as well as all of the other data that you guys need to know around AMC. So if you guys get value or simply entertainment out of this video, hit that like button for me, subscribe to the channel, comment down below, but most importantly, make sure to hit that like button if you own at least one share of AMC, baby. Get this video to 500 likes. If we can get 500 AMC holders to like the video, I'll be happy with that, and that'll make my day. So thank you guys for doing that, and let's dive into this video. SPY is coming down right now, and this directly correlates with the moves that AMC does. SPY goes down, AMC goes down. They are running as one, so do keep that in mind. Now, as far as this whole artificial shorting situation that is going on today and what has been happening, if you take a look at the sentiment for the option flow for institutional investors, the positive order value on the day is only 18%. So 78%, 72% of option orders are bearish, so they are puts. A lot of these puts are already in the money. So what happens when institutional investors are playing the put side of AMC, especially in the money, it forces market makers to almost instantly have to hedge the backside of that option so they don't lose money. And market makers, they control about 90% of the back end of calls and puts, and their job is to make sure you can always go in the option market and buy a contract. Sometimes it can be really expensive, sometimes it's sometimes it's cheap, but that is their job, and that's why that process happens. And that's exactly what you're seeing. Some very large orders today. Look at these: 1, 2, 3, 4 put block trades right there. 173,000, 151,000, 117,000, 154,000. Just massive put trades that are being initiated on AMC today, and that's driving a lot of that artificial shorting activity. Now, as far as the actual short interest, you're looking at 21.51%. So obviously still very, very high. 110.39 million shares that are estimated to be sold short. Cost to borrow max is doing some wonky things. It's going up a lot, it's coming down a lot. I don't necessarily believe these numbers, even when they shoot up. I just have a hard time believing you could get a loan on AMC for 1.9% to sell the stock short when it's down this much. Doesn't make too much sense to me. So keep that in mind. Those are the numbers. I don't know if they're right or wrong. Does not seem right to me. Share utilization is 81.45%, and days to cover is at 2.6. So we're at the higher end range of days to cover, and that is good. So once shorts do get forced to cover, it makes their obligation that much harder. If they have to get filled on real shares to return back to their owner, then if there's not that many shares that are circulating, it's very hard to cover, and that's what days to cover is telling you. As far as the news today that has actually been driving the markets down lately, ever since about this point and this point, was a lot of statements from the ECB Fed president. She's basically saying that they do expect inflation to get down to about 2%, and that the EU is not overheating. So that kind of said, like, hey, America's the only country in the West that is really overheating, and their economy is too much to handle, growing too much, and they have to start raising interest rates in an aggressive way. So that kind of sent a signal that America's in its own boat, and investors did not like that, as you guys can see. But it is still very choppy. It's up and down, and we really haven't done anything. It's because the big catalyst that is coming on Thursday, that is February 10th at 8:30 in the morning, we do get the inflation readings year over year as well as month over month. So they're expected to come in at 7.3%. If they come in higher than that, then I would expect a major sell-off in the markets, as the markets will price in a Fed that has to be even more hawkish. They're already pricing in 6 to 7 rate hikes, depending on who you ask and what bank you're looking at. And that's still very aggressive. If inflation starts to get to, say, 8 or 9%, they're going to start pricing in a lot more rate hikes, probably 0.5% rate hikes, and running off the balance sheet a lot faster. And that is definitely going to spook investors. No way around that. We're pricing in a lot of hawkish verbiage right now, a lot of raising rates, running off the balance sheet. But if it gets worse, do not think for a second the markets will not price in 8, 9, 10 rate hikes in this year. So that's going to be a little bit crazy. Keep that in mind. As far as if the number comes in at, say, 7%, then I think you'll have a pretty muted day like we are seeing today. If it comes in at like 6.5% for whatever crazy reason, then I do think that would be fuel to actually start rallying, because the Fed wouldn't have to be so aggressive, and the SPY is hitting a new low on the day, not looking all too good at the current moment, having a direct impact like we just seen to AMC. Now that we got those situations out of the way, let's finally talk about how there is really no more sellers left in AMC. That's exactly what has been happening with Facebook. If you do take a look at Facebook, it's pretty much the same thing. Facebook had that big down move, but you're not seeing as many sellers, so you're not going to see those 5 or 10% down days. And then some people are saying that Facebook is even value at this level, and that's along the same lines as AMC. You're getting to this value proposition where, hey, what's the book value of AMC? I think it makes sense to buy the stock and not sell the stock at these prices. Like, if people's average cost is in the 30s, say 30 to 35, and you're selling the stock now, I mean, there's going to be some people that would do that, but by and large, people are like, hey, it's already a loss. It's a lot easier to hold on to a stock you're down on than a stock you're up on and have massive gains. Like, AMC is my largest loser in my portfolio. It's down the most. I have lost the most money in the past year on AMC, so I am right here with you guys. But am I selling the stock at $15? No. So at one point you do start to run out of sellers, and all of this shorting activity will culminate into a massive rally. Mark my words on it. Even though I'm not a financial advisor, I would put my money on that. Not in options, of course. I would rather buy the shares. As far as the 13 filings that we are seeing, we see 1, 2, 3, 4 small positions that have sold out, but we are seeing some people increasing their positions. Here's 9.3% increase right here on 121,000 shares, 43% increase on 101,000 shares. I just messed that up, so we'll come back to it. And then here you do have 491% change to the upside, and you are looking at 41,500 shares on that position. A lot of firms are just holding on to their positions, though. Not everybody is adding, not everybody is decreasing, but some of these firms that are buying new positions are relatively big, and the firms that are selling out have relatively small positions. So keep that in mind. It's pretty much neutral. I wouldn't say it's all bearish. I wouldn't say it's all bullish. It's more in the neutral zone. As far as the stock O tracker data, if we do get positive CPI readings, the market really does start to chill out. Things could be good as far as the options are concerned. We only have 6,300 calls that are in the money, 182,000 calls that are out of the money. On the put side, 47,000 puts that are in the money, 55,000 puts that are out of the money. So if you do see a rally, there's a lot of fuel on the out of the money call side as well as the puts that are in the money on both sides to cause a lot of buying power from the market makers to drive the stock up. So do keep that in mind. It is possible to see a big rally due to the numbers numbers that we are seeing on the option chain right now, but I wouldn't hold my hat on it, and I'm certainly not saying make a short-term bet just on this alone. We know AMC is going to correlate what the broad markets do. If the markets sell off like they just did, so does AMC. So very important that you guys keep that in mind and you keep your risk in mind as well. I think the best thing to do at this current moment is just buy the shares of AMC, average down if you have not already, if that's something that you're interested in and you still have conviction in your trade. As far as the max pain, you're looking at $18 per share by Friday. And that's obviously a big move from the $15 give or take from where we are sitting right now. So that would be a very large move. It's possible. I wouldn't hold my hat on it. My price target is really $16.50 to $17.50 by the end of the week. I do expect a positive reaction as long as inflation data does not come in too far over, or really over at all, 7.3%. I do expect an overall rally if it comes in less than 7.3%. So that is basically all of that. As far as the earnings that you guys probably want to know if you are traders in general, apologies for that, is Take Two is in after hours today. Amgen, those are really the only two that I would play if I was. They didn't look attractive. I looked at both of those earlier. Before market opens tomorrow, Pfizer, BP, and Kadi. Those would be the only ones that I trade on that side. In Wednesday after hours, Disney, Uber, Twilio, Zynga, and MGM Resorts. Those could be decent. Thursday, you're looking at Twitter, Coca-Cola, PepsiCo, Datadog, AstraZeneca, Philip Morris. Those could also be interesting. After hours, Affirm, Cloudflare, Zillow, Aora, Cannabis, and then on Friday you do have Under Armour. So one thing I do want to point out, not financial advice as well, but if a stock is already beaten into the ground heading into earnings, it has a very low likelihood of continuing to fall. Odds are in this marketplace you have been seeing bounces if stocks are beat down into earnings, and you are seeing drops if the stock is holding up at decent prices heading into earnings. Or just a better way to think about it, if there's a lot of meat on the bone, then the stocks tend to drop. If there's not a lot of meat left on the bone like AMC, they tend to rally after earnings. So that is going to be all for this video. If you guys want access to all of our trades in real time, we have been killing it. Check that link out pinned down below in the description. Join a community of about 75 different traders. We'd love to have you over there, and thank you for those of you guys that do that. Hit the like button for me if you own a single share, subscribe to the channel, all of that good stuff. Thank you for watching, and I will see you in the next one.